All right, good evening, everyone. This is Ajit Mishra, and welcome you all in the weekly webinar, Week Ahead with Religare Technical. In this webinar, we talk about markets, means how the markets perform during the week, key sectors, both performers, underperformers, then top 5 gainers, losers from the Nifty 50 basket, followed by our view on Nifty and the banking index, followed by some of the stocks which should be on your radar in the next week. So we'll start with a quick disclaimer that the idea behind this webinar is to share the insight based on the technical information that what charts are indicating us. It's not a trading or an investment recommendation. So before making any decision based on the information shared, please check with your financial advisor. So now this was definitely a tough week. Means if you'll see the closing of Nifty and Sensex, it's not reflecting the right picture, just a 1% kind of a cut. But volatility after a prolonged period of a steady up move was something which kept the traders on surprised, and it was really a tough week due to this underperformance of banking. So after this volatile swing, banking was the one culprit, which is among the top losers. Then we have media, financial services, metal, and realty also that really under pressure. Again, defensive came for the rescue alongside with the IT majors. So that capped the damage somehow, and in fact, that triggered some rebound also, during the week. Among the top gainers, we have ONGC and BPCL from the energy basket. Then we have Tech Mahindra, Apollo Hospital, and Bharti Airtel from the other sectors. On the losing side, two prominent names. The first one, HDFC Bank, IndusInd Bank, and then LTIM, Adani Enterprise, and Davis Lab. They were among the losers, in the top 5 losers also. So net, it was a volatile week, and it was largely due to this banking underperformance of the banking, because 1% cut in Nifty and 4% cut in banking index. That clearly shows the kind of pressure that we had in the banking space. Now, what we are anticipating. So let's start with the Nifty. So if we dissect this move, so earlier we also had this kind of single day decline, but this time around, it extended for 3 days. Plus, this yellow line that you are seeing, we were holding this level for almost last 2 months now. This 20 EMA short-term average. So that was also a vector of comfort. But yesterday's we slipped below the same. Somehow we managed to reclaim that in today's session, and but it's not a very decisive close. It's a very small indecisive candle that we have formed in today's session. So what this indicates, this kind of volatility, this indicates after this phase is that somehow we are near to the immediate market resistance, and possibility of consolidation or profit taking is much higher. Instead of making a newer record high, possibility of consolidation and profit taking extending towards the lower level seems much higher after this kind of volatile swings. So and yeah, just to apprise you all that tomorrow we have a special session. The exchange are open for the equity markets. So we'll see the reaction to all the heavyweights, those who are going to announce the numbers today and tomorrow. So Reliance, HUL today, then we have Kotak Bank, ICICI the day after. So obviously it's going to be a volatile session, though it's a very short, I guess 2 hours session, but it's going to be a volatile session. So please make sure that you log into your system and plan your positions accordingly. So it's going to be critical that how market's going to react. But as of now, what the indications are is that we expect this consolidation to continue, and any rebound towards 21,850, this area, the high of this candle, will act as an immediate resistance, and then 22,150, which was the ultimate resistance. So any rebound on the higher side may continue to attract profit taking. And plus the kind of carnage that we are seeing in banking, that obviously might even cap the upside also. But as of now, we are anticipating this level to act as a strong hurdle. On the downside, this 21,200 will be the first area of support, based on the retracement and previous closing that we had, or the weekly charts. And the next is going to be closer to around this 20,850. So the room is slightly on the higher on the downside. Upside, we have limited area to cover. So in case if we rebound towards the upper band, 21,850, 22,000 zone, then look for booking profit and maintaining few shorts also if the market shows some sign of distribution. But as of now, the good part is that we are not seeing any major cuts in the broader indices. Despite the deterioration in the numbers of advance and decline, the broader indices, they are still holding strong. Though the volatility is high, no doubt about this is something which is in line with the index. But today also, like when the Nifty was up nearly a percent, they were up around over a percent each. So barring banking, other sectors, they are still okay. So we should be focusing more on stock specific approach in the coming sessions, including tomorrow. And yes, volatility always remains high during earnings. So it's nothing to feel surprised with. And because it's due to the earnings that SDFC came down, and that is what we are seeing in the markets also. So it's largely due to the earnings reaction that we are seeing the kind of volatility that, in the market at present. So since we have important numbers scheduled, we'll see the follow-up move in the coming session as well. So as of now, limit your positions. Don't be aggressive in your longs. Maintain few shorts also. If you are holding index majors, hedge them through index options. That's the way that one should look for trading until we stabilize. Next, banking. So banking is basically, if you remember that last week we talked about, if we manage to cross 28,400, this negativity might subside. Otherwise, there is a possibility of a breakdown from a distribution pattern. This is a head and shoulder pattern. So it didn't even give us the time to react. Means this single day fall below the previous swing low, that clearly indicates that bears are completely under control after this fall. And in the last two trading session also, we have not seen any major respite. Means though excess ICICI from the private banking majors, they are holding strong, but we slipped below the short-term average, this yellow line. Then we also breached or retested this 100 EMA. Now the major support comes around this area, which is coincides with the retracement zone of and this entire move from 42,000 to 48,500, 600 levels, around 44,600 area, which also coincides with the long-term moving average. So what the indications are? So indications are in the favor that we might take a breather around the current area. This is the 50% retracement zone around 45,300, 350. So we might take a breather, but the way we are seeing the SDFC and Kotak, witnessing a sustained decline, upside also seems capped. So now any rebound towards 44,300, 350, which was 46,300, 350, which was earlier acting as a support, will act as a resistance, and then the next hurdle could be closer to around this. So the only sector which can derail the entire momentum, as of now, it looks like banking as the only one. Rest of the pack, they are still holding comparatively better, be it IT, be it energy, auto, they all are holding strong. So we have to be very cautious because we have important numbers scheduled from the banking majors, rest of the banking majors in the coming days. So 45,300 is something that one should keep a close eye on. And if you are holding longs in banking, then it's more prudent that any rebound, especially if you are looking for a short-term buying opportunity, or in case if you have bought, the private banking majors on decline, SDFC and Kotak and IndusInd Bank, use rebound to exit your positions, because the texture has changed for all these names. So the rebound going to be limited, and there's a possibility that we might inch further lower. So this is about both the indices. Now stocks. So stocks, as like we've discussed, uh, barring banking, other sectors, we are still getting opportunities on positive side also. So Aarti Industries, one such name from the chemical space, which rebounded very strongly last week after retesting the trend line support here on the weekly chart. So there was a marginal retracement post this consolidation breakout, and this rebound with volume indicates much higher levels in the coming weeks. Those are high beta counters, so one should limit their position if you plan any trade in this particular stock. So Aarti Industries look strong for favorable move. Next on the list, we have IT major TCS. So last week we discussed about Infosys. This week is TCS. So the chart itself, explains why we like IT at present, because finally, after this prolonged range bound move, we are seeing the stock inching towards the record highs and holding around the record highs. So this gives us comfort, especially when the banking are on the back foot. Uh, this resilience in IT is something that might save market or cap the damage. So we feel that after Infosys, one can even look at see HCL Tech is the preferred bet. Anyways, doing well. It's trading at the record highs. But now we are seeing the catch-up move in the other names. So barring Wipro, TCS, Infosys, HCL Tech, these are some of the names that one can look at in a market like this, wherein we are seeing excessive volatility. So TCS is also something that one can look for accumulation, and alongside with some of the defensive names from the FMCG and pharma basket as well. Lastly on the list, since the market tone is negative, means sideways to negative bias, a few shorts also is something that one can look at. So Bata India, multiple challenges that we've seen the stock struggling with. First is the upper band of the declining channel. It tried twice but couldn't sustain. It made a breakout attempt here also, but it couldn't sustain. Uh, Problem area is that the 200 EMA, the long-term averages on the weekly chart, it has slipped below this mark after respecting that level in the last attempt. So this indicates a possibility of a gradual decline in Bata towards the previous swing low or maybe lower, the lower band of this channel. So Bata is one candidate alongside with the UPL, SBI cards. These are some of the names which are looking weak to us on daily or weekly time frame. So just to sum it up, expect volatility to remain high. This is one thing which is very clear due to earnings plus the underperformance of banking. The one factor which is somehow supportive is the performance of the global market, the US markets. But in a market like this, wherein we are seeing volatile swings in the private banking majors, it's not going to be a big help if this deterioration continues in the private banking major. So the focus area or the major deciding point will continue to be the earning announcements. So amid this, avoid banking this is something that one can do for the trading part, at least until we see some stability and some respite. And as we always recommend that don't speculate for the results and before the results. Let the stock stabilize and show some sign of recovery if you are planning any fresh trades. So that holds true for HDFC Bank also, and the other banking majors which are struggling at present. In the meanwhile, look for the other sectors wherein we are getting opportunity. IT is one, pharma, FMCG, auto. These are some of the sectors that one can look at. In fact, the energy space as well. On the stock specific front, we talked about Aarti Industries and TCS, which look positive to us, and Bata India. wherein we expect further decline in the coming week. So yeah, that is all from the presentation part. We'll do a quick feedback poll and then we can start with the Q&A. So please fill in your feedback, and if you're done with the feedback, you can start posting your question using that Q&A tab. Please quickly fill this feedback so that we can start with the Q&A. And no stock specific queries, please, so that we can conclude the session on time. So anything related to any particular sector, anything that we've discussed during the presentation and you want further details on that, we can definitely discuss. All right, so let's start with the Q&A now. Yes, so first question from Mr. Ashok on OMC stocks. Should we hold PSUs for the dividend? So see, dividend investing is different, Mr. Ashok, and the kind of buoyancy that we are seeing in the OMC counters. OMC, by the way, these are oil marketing companies like BPCL, HPCL, and IOC. They fall under this category, and they are doing exceptionally well otherwise also. So if you are holding for dividend purpose, if you are holding for the capital appreciation, both ways, they are doing exceptionally well. So, and despite the volatility that we are seeing in the market, they are holding very strong. So I don't see any reason to liquidate those positions. If your time horizon, let's say medium to long term, short term, there could be a bit of a consolidation of profit taking after this sharp move, but overall the tone looks positive to us. Okay, so next question, a follow-up question from him, that whether it's advisable to trade FNO segment. So this is the time basically to use the FNO segment, especially the options, to hedge your positions. So as I have recommended, I'll just give you an example that let's take an example that whether if we are holding HDFC Bank, Reliance, ONGC, all these quality stocks in our portfolio, and we are not sure of the markets. So what we can do is we can hedge those positions by buying puts or shorting calls. So the main purpose of derivative is to provide that kind of insurance in the difficult times. So it is okay if you are hedging your position, it's fine, and especially if you are trading on the long side, barring banking, and if you are choosing the other sector, it's good that if you maintain shorts by buying nifty puts, to hedge those positions. So it's completely okay. Okay, next question from Mr. Jainam on paper industries. Yes, this week we saw again, buying interest re-emerging, but we are not seeing consistent trend in paper stocks. So they are on and off, performing. The trend is positive if you talk about in general, but the kind of pause that we see, which extends for a month or long. So that is the problem. So if you are looking for short-term trades, maybe in for the couple of sessions more, we'll see this tone continuing. But a decisive uptrend is something that is not visible as so far. Thank you, Mr. Subramaniam, for the feedback, and no stock-specific question, please, as I've requested, so that we can end the webinar on time. Okay, next we have Mr. Avik Ganguly on FMCG space. So FMCG as a space is basically trading mixed. So ITC is holding strong. HUL is somehow also holding strong. It just you know they have released the numbers, so we'll see the reaction tomorrow. But it's not very decisive. But at the same time, it's not underperforming the sector also. So among the performers, I feel Godrej Consumers, ITC, Britannia, Colgate. These are the top four names that one can look at. All right. Okay. Okay, so this might be a common question, and as an exception, I'll discuss more on this HDFC Bank. So, if you are an investor, means if you have a time horizon of year or more than that, then in the last 2 years, we have not seen any return from HDFC Bank. Means the stock has been hovering in this range, 1300 to 1700 for almost 2 years now. We are gradually inching towards the lower band, means towards 1320 zone uh, that the stock was trading in. So if your time horizon is, let's say, for year and more, then definitely one can look for accumulating the stock on dips, so like partially buying at the current levels and adding more if it comes closer to 1400 and then 1350. So that should be the ideal strategy if we are planning any position in SDFC. Otherwise, you can avoid. And uh, if you ask me that from the medium term, short to medium term, then I feel Axis and ICICI they'll continue to outperform. So Kotak and SDFC, the underperformance might continue in the short to medium term. So any specific message for tomorrow's market? So tomorrow, as I've recommended, that is going to be critical based on the earning announcement of some of these top index heavyweights, that Reliance, HUL. Then we have other index managers like ICICI also scheduled to announce the numbers. So it's going to be a volatile session for sure because it's a very short session. So I'm not sure that how the market is going to react to, because first we have 1 hour session, then we have a break, and then another 1 hour session. So first we'll react to the earning announcement of HUL and Reliance, and then maybe by the time in case if ICICI also announce the number, then that's going to be critical, I feel, because after the underperformance of SDFC, all eyes are on Kotak and ICICI for their numbers. So and as of now, they are holding strong. Means ICICI and Axis holding strong. Kotak is trading in line with what we are seeing in SDFC. So it's likely to be a volatile session for sure. Okay, which share is there for the media, Nifty media, like Nifty Bs for Nifty? So, we don't have any ETF for media, if I can recall, Mr. Mahendra. So, I doubt that we have any ETF based on media. Uh, so, I need to check. So, maybe in the next webinar, we can talk about that in detail. Okay, stock specific questions, Mr. Chandramouli, I'll answer the first part of the question about the defense counters. So, without naming any, counters, overall we are seeing this trend continuing. It's just that we see a bit of a pause here and there in the defense-related stock, but otherwise the entire pack is still holding strong. So, I don't see any reason that if you are planning any fresh trade, you can definitely wait for a breakout in the top names, but uh, you know, shorting them or exiting them at current levels is not seems prudent. So yes, you can continue to hold longs in the defense-related stocks. Okay, this question is something which is not the part of the webinar, but will answer for the benefit of the larger audience that which moving averages that is useful. So if you're an investor, then look for long-term moving average. That is the 200 days of exponential moving average, which I use to gauge the overall trend. If the stock is trading below 200 EMA, it means it's a big no that one should not look at the stock for buying. And vice versa, if it's holding above 200 EMA, then it's uptrend is intact. One can continue to look for buying opportunity. So, Mr. Subramaniam, it's a special session. It's not for any particular segment. It's for all. Everybody, those who have an active account, they can participate. So, for timings, you can please refer to the NSE circular. Uh, that first 1 hour, if I'm not wrong, is from 9:20 or 9:15 to 10:15 something, and then some break, and then 1 hour session more. Okay, so next we have Mr. Ma on PSU banks. It's a good time to accumulate PSU banks. So PSU banks are showing comparatively better strength, no doubt about this, in the current market, carnage in the private banking space. But we have already seen very strong moves in some of these PSU names. So I feel that it's time that one should wait and see how the overall banking sector pans out, whether this decline continues in the banking, because that might cascade to the PSU banking majors also. So as of now, yes, they are looking comparatively stronger, but let's wait for SBI number or Bank of Baroda Canara Bank number, then we'll have a more clear picture. So fresh buying, I would recommend to restrict for the short term, not for you know uh, medium to long term. Thank you, Mrs. Hetal, for the feedback. Chemical sector, like we talked about, RT Industries. So it's again a mixed bag. We are not seeing any clear trend within the sector. So RT recovered very strongly last week. Then we have Deepak Nitrate also, which is holding strong. At the same time, Naveen Fluorine, PI, they are still reeling under pressure. So there is no clear trend. So instead of focusing on sector-specific approach, one should look for stock-specific approach within the chemical basket. Dr. Srinivasan, sorry, but we do not track or recommend any penny stock, to our clients and otherwise also. Okay, this is important, whether it's a good time to invest in the banking sector for the long time. So that, yes, is something, short-term fluctuations should not, deter you for making quality investment. So like, we discussed about SDFC, Axis ICICI. These are the names which may have underperformance for a year or two. But overall, if you see their performance, they are among the top performing names, across the basket. Uh, so obviously, one can continue to look at buying opportunities on dips in banking heavyweights as well. Okay, so next we have Mr. AR. Should I invest into IT and avoid the sector? Really, LTIM posted bad. Yes. So see, again, when we talk about any particular sector during earnings, it's very difficult to isolate uh, some of these underperformer if the sector is doing well. But that's the harsh reality that even if the sector is doing well, if the company announced bad result, the stock is going to be thrashed badly. That is what we are seeing some of these names, in the recent past. So I feel that as per the since there's no earning surprises left for the IT majors, that's the area that one can look at. So instead of looking for the mid cap IT names wherein the results are still due, uh, prefer the IT majors that we have discussed during the webinar also. And specialty chemicals we have already discussed. Mr. Ashok, in case if you're associated with us, you can write to us through our branches or business partner. They'll help you out to build a quality portfolio. Okay, we have already discussed chemical sector, Mr. Jairam, so hope it answers your query. Okay, let me check because there are multiple queries on timings for tomorrow. So it's 9:15 a.m. to 10 a.m. and then 11:30 to 12:30. Okay, so first 45-minute session from 9:15 to 10 a.m. and then 1 hour session from 11:30 to 12:30. Okay, next, PSU banks we've already discussed. So please check with Mr. Shishir with your support person, be it from the branch or the business partner team. They'll help you out. Okay, next we have railway stocks. Yes, so we are still not seeing any sign of pause in this momentum which we are seeing in the railway stock. The only thing that one can do when we see such momentum is to keep on trailing your stop losses on rise. Means if the stock is trading at 105, your stop loss should be at 100. If it goes to 110, your stop loss should be at 105. And in case if you fail to do that, we have multiple examples. In fact, one from the railway space itself, IRCTC, we have not seen the price of highs in last 2 years. So it is okay if you are chasing momentum, but one needs to be very strict with their stop losses if you are trading in such a highly, uh, momentum-driven sector. Power space, we have this query from Mosarat that it's holding strong. Means if you exclude a couple of names like wherein we are seeing bit of a profit taking like NTPC, Coal India, rest of the pack they are holding strong. So it's more of again like a stock specific approach that one should maintain. And since we are in the earnings season now, uh, uh, before the earning announcement at least, because we have seen exceptional momentum in the power space also. Maintain strict stop losses, or you can liquidate your position partially or completely, or you can hedge them before the earning announcements. Okay, no stock specific questions, please. You can just check, Mr. Chandamoli, the branch that you are associated with, or the business partner. They'll help you with this. Renewable energy sector, it's not anything specific. Means as and when we hear some news, some stocks like Sona Comstar, and on a similar line we have like the companies in this space, they witness some buying interest, but it's not very sustained move that we are seeing in the stock purely based on this. So I feel that Mr. Rajesh, that you should be focusing more on the energy basket, and wherein we are seeing this. Of course, if the view is long term and you are planning any positioning based on that, that is different thing. But as of now, I feel that OMCs, gas distribution, these are the names that one should look at. Okay. This is out of the purview of this webinar, that how we are going to see RBI making a stance on the interest rate. So we are more concerned about the what part, why and how is something that we avoid. So the what part is that what we are seeing in the banking at present. So we are seeing the negative trend. If something goes positive, it will reflect in the charts, and as of now there is no indication as such from the banking space. Okay, more stock specific questions. So yeah, we have answered all the queries related to any particular sector, and we are really sorry if we couldn't take your stock queries. If you are associated with us, you can definitely reach out to your branch or your business partner. They'll assist you to reach out to us and get those questions related to stocks answered. And yeah, and next week we have this monthly expiry week, so we'll have a special webinar next Friday with the rollover report. So please do connect for that webinar. Till then, take care and goodbye. Thank you.